Okay, so what we're talking about, just for the recording, we're talking about trading psychology today. As we did the recap, or as we went around the group, a lot of people were talking about Mark Douglas. I think Philip first was the one to mention Mark Douglas, and then Angelina had mentioned it. And I was saying that you cannot underestimate the power of trading psychology. The majority of our trading is what happens between the ears, and what we're looking at today. Again, we started, so I've just hit the record button. What we're looking at today is Mark Douglas's four fears of trading, and I was saying that you cannot help, if you want to be a better trader, it's impossible for you not to be a better person, because the way we all look at the exact same information on the charts, it's the same information. The price ticked here, the chart that you look at and the chart that I look at is exactly the same, but yet every single person on the planet that looks at the chart of euro dollar will interpret it in a slightly different way, even if it's a pipette different, or a stop loss different, or whatever it might be. Take profit might be different, the entry might be different, way to enter might be different. Yeah, the entry might be different. So importantly, what you see on the chart is static, it's factual. The prices have triggered there, the price has been there. And so the way you respond to the chart, and the difference between whether you make money from that information or whether I make money from that information, is simply based on how we respond to that chart. The chart is completely neutral. I want you to understand that first of all. It has the information that you see is not against you. If you get stopped out and it goes the other way immediately after pipping you out of your trade, the market's not against you. The market's just done what it's going to do. The market is not for you either. It's not in favor of you. It just presents information over and over and over and over again. And on the presentation of that information, you get the choice as to whether or not you take an action or don't take an action. And then if you decide to take an action, you get the choice as to what action to take. And so very, very important to think of trading as your personal expression and interpretation of the marketplace. That's why I can teach you all of these. I can teach you the basics as much as I like. I can teach you the intricacies as much as I like. You're still going to interpret it slightly differently. You're still going to take the science of what I'm showing you. This goes here, that goes there. Enter if you see this, exit if you see that. You're still going to take the science of that and add your art to it yourself. You're going to become artistic with it because it's your interpretation. It's natural that is absolutely natural that would happen. All right, so let's look at those four fears of missing out. So the first one, the four fears of trading. So the first one is the fear of missing out. Now, what does the fear of missing out? All right, I'm going to ask this while I put this little biscuit in my mouth. I've got my show you an unopened packet. Got my Anybody have these? These are lovely, man. Do you know
What
what I mean?
flavor?
These ones are the strawberry and cream flavor, bro. Strawberry. Can you see the happiness? I love these so much, right? And do you know what I do? I take one out. Mm.
A chew dunker, yeah.
Hang on, get yourself together, please.
I'm sorry. I'm sorry. It's just been staring at me for 20 minutes. Okay. I was going to ask you a question. Fear of missing out is the first thing. I'm going to go around I'm going to go around, and I'd like you to tell me a potential flaw in trading. If you suffer from, what is the biggest flaw of your trading? If you suffer from the fear of missing out, Rachel, I can see you first.
I guess it can lead you to start chasing things, I suppose, and entering things because maybe other people have gone in for a trade, but you've actually missed the entry point, and actually you're not actually going to benefit. So the fear of missing out becomes true, I guess.
It backfires.
Mm.
Yeah. All right, I'll take that into consideration. And Joe?
I think you make rash decisions But if you think there's, like, say you've had a quiet week, you can't be seeing anything on the charts, and you think, well, I've got to earn money, otherwise I've done nothing for this week. And then you're just taking trades for the sake of taking trades.
Absolutely right. So the fear of missing out is really going to cause you to rush. It's going to cause you to rush. This for me, as I look at all of these, the fear of missing out, the fear of loss, the fear of being wrong, and the fear of letting a win turn into a loss. My personal, and I think this is the reason why it's number one, is that my personal biggest fear is the fear of missing out of a trade. And it doesn't mean that it's a debilitating problem, but if I look at my entries and my decision to enter a trade, a lot of the time there will be something that says to me, you don't want to miss this one. What about if it goes now instead of goes later? All right. And so the fear of missing out is oftentimes going to cause you to enter a trade early. And what happens when you enter a trade early? Now you're sitting in drawdown. And when you see drawdown, so let me just explain again for anybody that's not sure about what drawdown is. A drawdown is when your trade is losing, but it hasn't hit the stop loss level. So it's still alive, but you're watching a loss on your trading screen, right? You're still in the trade, and there's every chance for it to come back, but you don't want to see drawdown because you're like, it changes your thinking sometimes. It's like, oh, I'm losing money. So the fear of missing out often will cause people to enter trades early, to enter trades too early. And then you have to watch your trade sit in drawdown, and then you start to double guess yourself. Should I double up? Should I increase my position? Should I change my stop loss to accommodate the fact that I've clearly entered this trade too early? And it all starts with a fear of missing the trade. The fear of missing out can also, this is what I was talking to Phil and Rob right before this call, before everybody else joined. The fear of missing out can also cause you to stay in a trade too long. Yeah? Do you understand the reason why? The fear of missing out can cause you to stay in a trade too long, because although you may have hit your take profit or had some profit and closed some of your trade, wanting to take more out of the trade, the fear of missing out on more will cause you to stay in that position when you really should have closed it. And what happens if you stay in something too long? Inevitably, it will reverse and it will wipe out some of your gain. So fear of missing out is one thing we have to really, really, really manage as we think about our life as a trader. Anybody else got any comments on that? I mean, I don't want it all to be about me. If anyone's got any comments on that, by all means, let's have that today. I think it's the session before we close off. This is probably the right way to do this session here. So if anyone's got any thoughts on the fear of missing out, important one.
Yeah, I could just make one comment. I haven't done like you do guys. I've done HFX, but I can relate to that fear where where you're in a call, HFX call, and an entry point is given for 5 minutes, and then you miss the point. So you should really just forget about that trade, but you're still looking for the market to come back to that point, or when you realize it's not coming back to that point, you're like, okay, maybe I could try here, and then because you think, okay, it's predicted that it's going to go that way, so if I come at this point, I might still get something out of the trade, and then end up in a mess.
Absolutely right. And if anybody hasn't traded, sorry, if you haven't traded HFX, it doesn't matter. What Sandra is saying is so true. Fear of missing out can manifest in, oh my goodness, it's triggered, my trade is triggered, I missed the entry because I wasn't on the screen or I didn't have my markup right, can I still get in? Now you end up chasing a trade. Either way, it's just wrong. Either way, it's just, it puts you out of balance, yeah? Remember, for me, the most important word in trading is balance. And the minute you start chasing a trade, it just throws you out of whack, throws you out of balance, and you should just walk away, find the next setup. But
I've got a question.
Yeah, go ahead, Trish. Yeah.
So I'm a beginner and I've not done any live trading, but in my head, I want to make money from trading.
I'm
That's why
so glad you do, babe. I want you to make money from trading too.
that's why I'm here, guys. As much as I
Yeah.
love you guys, I don't need to see you Saturday morning. My aim is to make money, right? Philip, remember they used to say, my aim and my determination is to make money, right? So when you say,
That was a church reference. For anyone that doesn't know, that was a very old school church reference.
so yeah, I want to really make money. So when you're saying, sometimes if you miss it or you got to know when to go in, or how do you actually, I mean, like, what would you say to me as a very, very beginner stage? What should I be looking for? Should I just be watching the markets first before I go in, see what others are doing?
All right.
Or,
Let me tell you. Let me tell you,
I just
babe.
want that one piece of advice that you say, right, check all these confirmations, then go in. Or just actually don't go in.
Okay.
Wait, there's one more thing as well. On
Just tell
the,
me to wait.
no, there's one more thing that they said on the IM that you should actually, is it write down your trades?
Yeah.
So don't actually take them, but just write them down and then see that there's a pattern or something, which I haven't yet done.
Okay.
Should that be the one piece of advice?
There's no one piece of advice. There is no magic pill. Please. It's such a good question, and I understand the heart of where this question comes from. Because as I don't know whether what the right, as early stage traders, some of you are more experienced, some of you are less experienced, that's fine. But as early stage traders who see the market as an opportunity to make money, you're just like, well, just tell me how to get money out of this marketplace. Yeah? And I promise you, there is no magic pill. There is no red pill. I can give you lots of advice, right? And so the next question might be, well, why am I doing this then? And the reason why you're doing this is because there is a never-ending waterfall of opportunity which you have to massage and learn how to extract and put your bucket under to take what you want from it. There is no single magic pill. There are a lot of key advices like stay balanced, stay calm. One thing I would say for you, Trish, is that there's no hurry. When I tell you that trades are like London buses, there's no shortage of them. They just keep
That's
coming.
good. That's good.
They just keep coming. They just keep coming. And you might have to suffer a little discomfort of waiting for the next one, but that's fine. Just wait for the next one. There's no shortage. I don't know if you really understand. There is no shortage of trade. I'm talking to myself. There's no shortage of trades. There's no shortage of opportunity. We are involved in maybe the most abundant marketplace of opportunity that you can possibly be in, where literally every single second of every single trading day, there is an opportunity to make money. There's no hurry. You just have to learn the skills, take your time, and you will find the best potential setups. Hurry and speed comes in when you're like, okay, I'm approaching my 50s. I don't know how much longer I've got to work. Mortgage needs paying off. Kids' school fees need this. I've got a bill coming up in 6 weeks. That's not the market's fault. That's life. And do you understand what I mean? The market, that's nothing to do with the market. And so immediately you can see how you take the situation of life and the pressure that life is giving you to learn a new skill, or to develop yourself in a different way, or to pay your bills, or to get your son's school fees, or to buy Christmas presents. You take the pressure of life and you put it onto the market and say, I need to take this trade now because that's going to buy my kids Christmas presents. Well, no, you're moving too fast, right? I don't know if that helps to answer your question. I'm telling you, trading psychology is something we definitely had planned to touch in this course, and I'm really glad that we touched it early. You will see a reflection of yourself when you start clicking those buttons. I guarantee you will be looking at yourself in the mirror when you start trading. You'll be like, oh my goodness, I really am greedy. You won't be able to deny it. You'll be like, oh my goodness, I'm so greedy. If I had just taken my profit, yeah, you'll realize, you'll look at yourself in the mirror and say, oh my goodness, I'm such a scaredy cat. I knew it was the right time to hit I knew it was the right time to trade, and I didn't trade. I'm such a scaredy cat. Trust me, when you start trading, you're gonna be looking at yourself in the mirror. Okay. So we've done the fear of missing out. We're doing the fear of loss. Okay, so Sandra, you were next actually. If you can tell me what impact you think the fear of loss will have on your trading. And I'm making this, I don't remember what the book says. I'm just going from my own personal experience. You've had some experience with HFX. If you're scared of losing, what potential impact will that have on your trading?
I've actually in HFX, what you see that the trade is not going in your favor and keep rolling over, and you're just increasing your potential loss, and that's happened to me.
Is that scared of losing, or is that scared of missing out? Because if you're doing a roll up, for anyone that doesn't know, on HFX, if you make HFX times out, you've got 3-minute trades or 5-minute trades. If after halfway it's not quite going your way, you can double up and say, hey, I still think it's going to go my way. It's called a rollover. So with a rollover, are you really scared of loss, or are you scared of missing out?
Because in my case, I was convinced the market would be going in that direction. And so if I didn't roll over, I would lose the money. And I also miss out when it eventually went in that direction.
I think
Yeah.
if you're brave enough, I'm telling you, a rollover is gutsy. To click rollover, which is, I want to explain it again for anybody that doesn't know HFX. You enter a trade, you can see the time's running out and the trade's not going your way. It's like doubling up. If anybody played blackjack, it's like doubling down. Yeah, it's like if everyone's ever had a bet with a friend and they say double or quits, it's like that, double or quits, right? That's what a rollover is. And I think that if you are brave enough to hit double or quits, that fear of loss is not, you're not worried about the loss, because you know you can still lose. I know which one it is, but
Fear of missing out. It's definitely missing out, because that takes guts. You got to be a confident person to say, I don't mind
trust
losing
me,
it. Yeah.
you are gutsy. If you click in rollover, I've done it. I've traded HFX, and I hate rollover. I don't have the balls, because I don't want to lose. What you're talking about there, Sandra, is a fear of being wrong. I think, maybe, I don't know, but we'll come back to that in a minute. We'll come back to that example. We'll see. We'll examine it as we go along. We'll examine it as we go along. All right. Angelina, what do you think is one of the impacts of you being impact on your trading if you have a fear of loss?
Yeah, I think I mean, I don't think I'm this kind of person, but I think you'd never want to enter the trade that you might analyze to the nth degree. And you might analyze to the nth degree and study and, check the chart and put your confirmations on. And even though you've got the confirmations, just go back and check again. And just be overzealous about the check-in, and it's coming in, but you're checking.
Very, very good. Very good. Do they need
a couple of minutes? They need you quickly.
Okay.
Just have a 2-minute break.
Okay, bear with me. I really want to continue with this. The guys that are doing something in my bathroom, they need to talk to me about something. I promise you I won't be long. Forgive me. Should have told them to come later. I agree with what you said about fear of loss, Angelina, and we'll come back. Why don't we just take a 3-minute break? We will run until 10:15 or 20 past this morning. 15:15, I think. if that's okay. And I'll be back. I just need to sort this out and I'll be right back, okay? Thank you guys. Thanks. Okay, cool. So, yeah, just continuing from where we were, fear of loss. Angelina, thank you very much for what you said about fear of loss. For me, it's really fear of loss will prevent you. It will make you trigger shy. Yeah, you got to think of it like we're going into this market to be snipers, to sit on top of that roof, waiting for that shot. And if a sniper is has a fear of missing his target, yeah, he'll never take the shot if he's scared to miss. Yeah, and then not missing out, but scared to miss. I lost my target. I lost my shot. And so we have to be brave enough, and this is where everything starts to come into balance, because you don't want to have a fear of missing out, which causes you to click the button too early. But you also don't want to have a fear of loss, which causes you not to click the button at all. So it's a balance between the fear of missing out and the fear of loss, which says, okay, I'm going to have to trade at some point. Let me take my execution here. The other thing about fear of loss is that you will only be scared of losing if you haven't fully accepted the risk of trading. All right, we are in a risk-based market. There's no way for us to not lose. I don't know any trader that doesn't lose. So we're in a risk-based market. I don't know, there's no way for us to not lose. And we must accept the cost of finding out whether or not our analysis and our trading ideas are correct. Think of it like a cost, like a charge. The market is so beautiful. The market is charging you for you to find out whether you're correct or whether you're incorrect. No problem. That's the price of admission. You don't go to watch Spider-Man No Way Home without paying your entry fee. It's a good film, by the way. I watched it last night with my kids. Yeah? You got to pay for your entrance. You got to pay for the entrance. You don't have to pay for the ice cream and for the drinks if you don't want to. That's a choice. But if you want to watch the film, you got to pay for admission. The same with the marketplace. You got to pay to put your trade on. You don't have to over leverage. You don't have to double your position, but you do have to pay to find out if you're right or if you're wrong. Right? So fear of loss, to avoid fear of loss means that we must accept the risk of trading. Yeah, we must accept the risk. That's what we do. We are risk takers. We are risk takers. We are risk takers. That's it. We are risk takers as a trader. Okay, cool. Fear of
Leon,
yeah,
just to balance that point, and I know that we probably cover it sometime going forward, but I think you also did something it might have been on Facebook sometime about difference between risk taking as a trader and risk taking as a gambling.
Oh wow! Remind me what I said. I mean, I don't know what I can imagine what I may have said, but go ahead.
Yeah, I think what it is that I'm just trying to remember, and it did come back. It came back up on my Facebook as a reminder. You shared it about a year or 2 years ago on your Facebook. What is it? It was the difference between taking risks as a trader and the difference between taking risks as and in gambling. I can't remember what
So
it is.
what I most likely would have said in that instance, all right, a gambler leaves all of the risk to chance. It's completely a coin flip. I mean, and when we talk about gambling, Mark Douglas talks a lot about this in the book. It's beautiful, really good. You've got to go and listen to what Mark Douglas says about gambling in the book, being a sequence of random events that collectively makes a pattern of events. But that's not what I'm talking about. What I probably would have said is that gambling leaves everything to chance. The spin of a roulette wheel or the flip of a card is completely random. You never know what's going to happen next. Trading is completely random in many, many ways. Look at the book. I'm not going to go into that right now. But with trading, the risk that you take trading, it is calculated. It is a calculated, analyzed risk. You've looked at the market, you've studied it, you've prepared for the market to continue in a particular direction, to reverse from a particular direction. You've done all of that preparation already. So when you put your money at risk in trading, it's risk with preparation, with calculation, with analytics. All right, and so that's the reason why I'm very, very prepared to do that. When I go to the casino, which I haven't been for a long time, can't wait to have loads of money so I can just go and enjoy that. It's really fun. If you've never been to a casino is a great way to spend 50 quid if you want to just have some fun, right? And you may leave with your 50 quid and more. It's fun, right? I will always play blackjack. And the reason why I play blackjack is because for me, in my head, once you know the rules, the odds are very, very slightly in your favor. It's much more calculated a game than the spin of a roulette wheel. Okay, I might do the spin of a roulette wheel just for fun, but it doesn't make sense to me. It's just completely random. So I'd much rather play the blackjack where the outcome can be skewed in your favor with a little bit of analytics and thought. All right? That's why I love trading. Okay, cool. Thank you for that. If you can send me the video, I wouldn't mind seeing if you still have it on your timeline. Don't worry if you don't have it, Philip. Okay, let's whiz through these last two in the next 15 minutes. Fear of being wrong and the fear of letting a win turn into a loss. Okay, so fear of being wrong. Any thoughts? Where do we get down to? I think I was going to say something really funny. Hey, babe. Trish, you want to talk about the fear of being wrong? Seeing as you suffer from that. No, sorry, I didn't say that bit.
Because I'm always right. I don't think that would be the best one for me, babe.
Seeing as you struggle,
I'm never wrong,
with that, darling.
So
seeing as you struggle with that, go ahead. Talk about the fear of being wrong.
I don't know anything about that.
Oh, no, you don't.
That's the honest truth. I'm always right here, so
okay.
I don't know. Maybe throw that one out, babe.
No, all right. Seriously, from a trading perspective, you're next on the screen. So from a trading perspective, how do you think the fear of being wrong would impact your ability to trade in a balanced way?
The fear of being wrong. So I'm seeing that as, would I be extra cautious or overly cautious and then kind of scared to take the jump because you're not sure what way, although you've waited for your confirmations, you've watched the market, you've done all your due diligence, then it's for you to just take the plunge. But myself, personally, I think I would be kind of overly cautious and then may miss it because I'm scared of being wrong. I wouldn't want to jump in unless I know I'm going to make money. I know that's the wrong way to look at it because you're going to have to lose some and you're going to have to learn, whatever. But for me, I would be thinking, no, I'm not doing that. I'm not going to go. Then I'm going to jump in and maybe still not win, and it would just knock me back.
Okay, so this is really an interesting one. I didn't look at it that way, and I'm glad you said it because I didn't look at it that way. The fear of being wrong can actually prevent you from getting into a trade.
Yeah.
Yeah? I wasn't thinking about it like that. Like, I don't want to lose my money. It's tied to the fear of loss, obviously. So the fear of being wrong, if I'm wrong, I'm going to lose.
Yeah.
Can prevent you from getting into a trade.
Yeah.
And I'm telling you, you will experience it. You will do that, and you will see that if you had done the right thing and clicked the button, it would have gone in your direction. Oftentimes, I've missed trades, and I'm like, thank God I didn't hit the button. Thank God I didn't trade then. But I've also not taking trades and it's gone in my direction. So yeah, fear of being wrong can prevent you from getting into a trade when you should have. Yeah, and I'm going to come to the way that we can solve these fears.
And you can also do the wrong thing and miss out, right? So you can jump in and the market could still just go the opposite way. Like you have, I don't know if you have control over that. You could still do everything right and still lose. Isn't that right?
Yeah, you can. Okay.
So that is, you've done all your checks and you've done all your research, you've watched the market, but you could still lose. That's like a problem for me. Like if I've done everything right, I need to get the results. I need to make the money.
Correct.
Why am I lost? I've done everything right. Why I've studied for the exam, I've done all my bits. Why have I only got a D?
And do you know who was like that? Do you know who was like everybody doesn't know. My son Jude, our son Jude. He's exactly like that. This goes here, that goes there, this stop this that goes there, market comes here, I trade, I win. Why didn't I win? Why? And he's like, nah man, this thing is rigged. You know, this is that kind of approach. And the whole point we need to understand is that the market is going to do whatever it's going to do. Your analysis can be perfect. I've been right so many times and still not been right. All setup's perfect. This looks perfect. I've seen this setup so many times, and all the times I've seen it, this happens. And if you go back into the book, that's when Mark Douglas talks about each and every single trade being a completely unique experience. No matter how close it looks to a previous experience, each and every trade is a completely unique experience, and the outcome is completely random. Only when you add all of the random events together do you start to see a sequence, right? So very good point. Rob, I'll jump onto you because I'm mindful that we've gone to 10 past and I don't mind going on. I think it's a really great topic. We've got one more fear to cover. But how do you think the fear of being wrong might impact your trading?
You know what? I agree with Trish with it, to be honest. Like, I'll be honest, yeah. Like, obviously, me and you've been doing this for a while now, yeah. And like, probably at the start of this year, I was going live. I was ready to do it. I had a family member that was ready to give me a substantial amount of money to put in to start with. And I've always been the person like, yeah, give it to me. Like, I'm going to go run away. I'm going to do it. And do you know what I mean? But this time I've held back just because it's like a fear of, it's going back to that one, it's fear of losing. You know what I mean? I've just.
All right. Let me cover these 2 points. We're all getting to the stage now, and I will talk to Del about this, but we're all getting to the stage now where we should have dummy accounts. Not real live accounts. You shouldn't have put your money into a real live account yet, most of you. Some of you could, but the majority of the team should at least be on a dummy trading account. And all I can recommend to you is that you start imprinting your views of the charts onto a dummy account. You're ready. We'll do this early in the new year where we help you get set up. We'll do a clinic where we help you get set up so that you can start dummy trading. And the more you dummy trade, the more you practice, then switching over into real money there's a little psychological shift there. There really is, because you're aware that in a dummy account there's no risk or pain to you, but in live money there could be. But if you treat the dummy account like real money, you look after it like a baby, you really treat it with your heart, look after that dummy account, the transition from dummy to real will be really, really small. And this will help with your fear of loss. It will help with your fear of loss, and it will help with your fear of missing out, because you'll learn to click the buttons at the right time. I want to add one thing about so Rob, for you, before I move on, you should definitely be on a dummy account. And let's deal with, I know we deal with each other as a group, but for this moment I'll just deal with you individually. You should I think you are anyway. You should 100% be trading dummy. Oh, and the other point I wanted to say to you is take a large dummy account. I've changed my view on this drastically over the last 3 to 4 months. My previous advice would have been take a size of account that you're likely to start with. So if you're going to start with £5,000, then take a dummy account of £5,000. If you're going to start with £1,000, take a dummy account of 1,000. All right. But now my viewpoint on this has changed significantly, and I would like you all, especially if we are moving towards being funded. I'm still preparing. I've had a couple goes at my funding and not quite made as much money as I needed to make to qualify. Everything else passed, but just fallen a little short on the 10% for the month, right? So no problem. I'm going to keep on doing that, and you'll know very soon in the new year when I've passed my FTMO or my funded challenge, whichever one I choose to take. But please, if we are moving towards funded traders, take an account size of at least $100,000 or pounds, whichever one you want. 100,000 dummy account, and get your eyes used to seeing fluctuations of 200, 300, 500 pounds fluctuating in your account. Because automatically £500 in drawdown, if you're only used to a £2,000 account, it's like it's all in my account. You would never see that anyway. If you're seeing £500 drawdown on a £2,000 account, you're doing something wrong. The point being, take a big account size so you can get used to the fluctuations of big money. You need to get used to. Your eyes and your body and your mind needs to get used to seeing big money. Okay, so that was for you, Rob. If you haven't got an account size already, open a new account with 100 grand on the account, on the dummy account size. Yeah.
Cool.
Okay. What I was going to say for fear of being wrong goes back to Sandra's point, actually, which I found very, very interesting. And because most of us are doing traditional FX rather than HFX, let's take this into the HFX world. So let's take this into the FX world. When you do a rollover in HFX, which means double my position, effectively the equivalent action in foreign exchange trading is what? Can anybody know what the equivalent action is? If you're doubling your position in HFX, which means keep me going, would anybody know what the equivalent action is on traditional FX trading?
Stacking orders.
Compounding.
I wasn't thinking of stacking orders, Joe. It could be. You could add another position. That could be, but that could be one, but that's not the one I was thinking of. That could work, yeah. Any others? The most common one that people do all the time in FX trading, me included, shouldn't, but it's true.
Maybe increasing your stop loss or
Exactly. That's exactly the one. So the fear of being wrong, combined with the fear of loss, will cause you to. So you're right, Sandra. The fear of being wrong, combined with the fear of loss, will cause you sometimes to move your stop loss down a little bit. Okay, I don't want to. I know this has got to go the other way now. It's got to go in my direction now. Let me just give it a little bit more room. I guarantee you'll do that. I guarantee. I will bet my life. I will bet my own personal life. No one else's. I wouldn't do that. But I bet my own personal life that every single one of you, at some point or another, will move your stop loss. Guaranteed. I bet you everything I've got for the next 20 years that you will move your stop loss at some point or another just to stay in the trade just a little bit longer. You can't, I guarantee, nobody's that disciplined. I don't think. Maybe there are some, but I'm definitely not. So fear of being wrong will cause you to actually not take the trade, and it will cause you to sometimes move your stop loss when you should actually leave it where it is. Okay, last one. Fear of letting a win turn into a loss. Fear of letting a win turn into a loss. Who hasn't had their bit on this one? Rachel, did you say anything on this? How would fear of letting or did I miss Angelina? Have I missed you, Angelina? Have you said something? Okay. Rachel, how do you think fear of letting a win turn into a loss might impact your trading?
by taking profit early, not necessarily following your analysis and just taking profit early because you don't want it to turn into a loss.
That's the biggest one. That's the biggest one where you'll be in profit, and instead of allowing your trade to run, you you close the trade or move your stop loss too close to where it is right now. You can solve that by following market. You can always know where to put your stop loss if you follow market structure. But you're absolutely right. Fear of letting a win turn into a loss will often cause us to close the position. They often say amateur traders let their losses run too long and cut their winners too early. That's amateur traders. Let me say that again. Amateur traders allow their losses to run too long. They don't get out of losing positions, like because they're fear of being wrong, right? And they cut their winners too early because of fear of either turning a win into a loss or fear of missing out. And so the key word in all of this is balance. You can't have fear of missing out and let your trade run for too long when you should actually have closed it out or put your stop loss really, really close. And you can't have a fear of letting a win turn into a loss so that you cut your profit before the right time. The only word to encapsulate that is balance. It's balance, 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 balance. Balance in every area of your life. So I'm not going to get into a life coaching session this morning, but balance in every area of your life is key, 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 key. All right, now let's close this off. How do we avoid these fears? How do we avoid these fears? The best way to avoid these fears is to develop over time your own trading game plan and system. Now, what Dell and myself are doing for you is that we are preparing you with the information which we have found useful to identify good quality trade setups. But you are going to have to build your own trading game plan and trading system. Let me give you some examples of what your trading plan might include, and there's lots more. We'll talk about trading plan on a whole different level. I'm really glad that we started to touch on mindset actually, because there's a lot to this. Okay, your trading game plan and system might include things like, okay, because I'm working from 9 till 5, I must be up at 7 to analyze the charts, and I can only enter orders because I'm not going to be at my desk to trade. That's your personal trading plan and system. Yeah? Your trading plan might be, do you know what? I'm only going to trade GBP currencies, or I'm only trading indices. Your trading plan might be, I'm committed to trading only between the times of X and Y and X and Y. And outside of those times, I will not hit the button no matter how good it looks. So there are so many other things that you can add into your trading plan. Time, I think I said time of day, sessions, whether you're in New York or London, currencies, what currencies you want to trade, whether you're only going to execute in orders rather than market execution. Your trading plan is completely yours. But it's important that you do this, because once you've got your trading plan, then you'll know how often, listen to this carefully, then you'll know how often your trades work when you execute according to your plan. As soon as you start moving outside your training plan, then things become too random and chaotic. Well, this one worked, but someone said, I was listening to a call this week. I think it was a girl called Jenna from Australia. She's really cool, very good trader, and we think very, very similarly. And she said one of the worst things that can happen to you as a trader is that you execute a trade that's not in your game plan and you win. Because now you've just messed everything up. You're like, well, I don't need a game plan then, or I can be random and chaotic because I just want to trade like this. It's essential that you find your trading strategy, find your trading game plan, and stick to that. Trish, you know what your responsibilities are through the day and at what times you're working, what times you can sit on the charts and at what time you can't. Boom, that's what you do. Rob, you're running a business. You know what it's like to have to run a business, when your lunch break is, how many calls you get that interrupt you for your day. You've got to build a trading plan around your life. Phil, you're in a full-time job. You know what you have to do, and if you can trade around your full-time job. I'm not going to go through everyone. Rachel, you know that Saturdays are usually busy, or sometimes busy for you. So when do you do your chart analysis? Can I do my chart analysis on a Sunday evening, or what point during the day, considering the way that I live my life, can I structure my study and my planning for executing my trades during this week. I get on the charts every Sunday at about 7 o'clock for an hour, just to prepare myself while the markets aren't moving, to see if I can see any potential setups for the week as part of my trading plan. I trade between the hours of 7:30 and maybe 10 o'clock in the morning. When I try to execute, that's when I really want to execute my trades. If I see an execution between 7:30 and 10, or maybe 11, I really want to take those trades, because that's the heart of London trading time. Then I will take a pause. Might take one if I see a really good setup, because it's still London trading day, but the meat of the day is in the earlier morning. But I want to be back on the charts from about 1-ish, 1:30 until 3, because that's the New York Open, and that's where more volatility comes into the marketplace. This is the way that I try to structure my trading day. So you will all figure out a trading plan, and the point of the trading plan is to eliminate the fear of loss, the fear of missing out, the fear of turning the fear of turning a win into a loss, and the fear of being wrong, so that you can trade balanced and neutral. I'm in my trading time. It's between 7:30 and 11 in the morning. I can take this trade if the setup matches. It's a GBP currency. I can take the trade if it's right. So point being, let's build your own trading plan. It's up to you. Write it down. Build your own trading plan. Know when you can execute and when you can't, and just move in a way that gives you the best possible chance of taking random sequences of events and turning them into a pattern. Right? Give yourself the best possible chance of taking random sequences of events, like every trade is, and turning it into a long-term consistent winning pattern. And that's it. How about that for an hour and a bit on trading psychology? Love it. We should do more of it. I don't know if anybody agrees that we should do more of this. Let me know, please. I'm quite interested to know if you think we should do more of this. Or is it too early because you haven't started trading yet? Talk to me.
Definitely could do more with it. It's crucial, as you said. Sometimes we get it back to front. We think, no, I just need to learn how to trade. But actually, what you just covered, if you're scared you're going to lose, you're going to miss out. It doesn't matter what you know, does it really? You're going to mess up. And I love that line. Trading is, you said it front and paraphrase, like a London bus. I mean, when we really get to grips with that, you'll understand you can make money, like you said, at any time of day. That's not the issue.
Never ending. Absolutely never ending.
I think as well, Leon, just going back, I think one of the things he said very early on is that in life we've grown up with a particular psychology about how we live life, and we can't bring that psychology to trading.
That's correct.
How you look at the world and how you interpret the world is not the way how you need to look at trading and being on the chart. And that's why for me, I think I would have liked to have known about this psychology much earlier. So yeah, talking about it much more often I think it's much more beneficial as well.
Really good, really good. So either we'll do more complete sessions on this, or we'll include it as little snippets inside the weekly sessions that we're doing. Joel, was you going to say something, or anyone else?
Yeah, no, I think it would be helpful to learn it now. So then it's not going to be a shock when things might be going wrong, because you can analyze it yourself. You already know.
Really.
Actually, I'm doing this wrong.
Really good. All right, I'll take that on board. Phil, you're so right about you can't interpret trading in the same way you interpret the real world. It's a different way to think. All right, guys. Any other comments? I mean, it's no problem. We're 5 minutes. We might as well run to 1:30 if there is any other comments. If not, we can shut down. Any other comments?
You talked about a couple of things. You said setting up a dummy account. It would be good to know kind of how to do that if we don't know. I mean, I set one up, but I've never used it, so I don't. And I'm sure I've been shown how to put a trade on, but I still haven't done that. So that kind of stuff might just be nice. I know you probably got it in the plan, but and then you talked about, the size of that account and just some of those things you said. I need to go back to the recording.
Okay.
Actually, were quite crucial.
So what we'll do then, early in the new year, in January, I'll show you 2 platforms. One will be called C-Trader, and I'll show you that C-Trader as an application on your laptop or computer, and I'll show you it as an application on your phone. And I'll also look at MetaTrader 4, which is the most common one. I use C-Trader, believe it or not, but I'll show you MetaTrader 4, and I'll show you that on your laptop or computer and also on your phone because they operate differently, and you can take your choice. But I would highly, highly recommend that if you have any ambitions of being a funded trader, that you take £100,000 account size and just get your eyes used to losing £1,000. Hopefully it won't be, but get your eyes used to the fluctuations of hundreds of pounds rather than tens and singles of pounds. We will start to think in terms of percentages and ratios. So 1% of 100, you'll just get it. It's £1,000. Man, I lost 1% of my account. No problem. It's the same as losing £10 out of a £1,000 account. It doesn't matter. All right. So we'll learn to think in percentages and ratios, but let your eyes get used to seeing big numbers moving on your screen, because that's where we want to be going with the trading. Okay. Anything more?
Just a general question. Did we make a decision that we're going to stay together as a group? Because you did mention some are a bit more advanced than others.
Yeah.
And also, that's my first question. Second question, are we still having it on the Saturday morning? Is it the right time for everybody? It's getting a bit busy, and obviously we can't be there every single week, and Dell looks like he's very busy now on a Saturday.
Let me get
it'd be good to hear Dell sometimes as well as you, babe.
All right. So what, you don't like hearing my voice now?
I've heard enough of you. I live with you. I do love you, but come on.
Yeah, Lord.
Teacher, husband, dad, lover, everything. It's like it's too much, isn't it, Rob? Isn't it, Rob? Too much, isn't it, Rob?
Too much.
Intense. Isn't it, Philip? All right.
All right. Let me answer the questions. So the first question is, are we going to stay together? I think the only person that wasn't part of that conversation was Rob. I think Rob was away that week, and just because I know Rob, we've become mates and we've been working together for a long time. I didn't even go to Rob with the question because I know what he's going to say. So most of the group had the intention to stay together. And if I'd gone to Rob and said, "Hey Rob, look, I know you're kind of advanced in the group. You know a lot of this stuff. Do you want to separate or do you want to stay together?" He would have said, "Let's stay together." Yeah.
100%.
So I'm right. Am I right? Am I right?
Yeah. Listen, we started together. We finished together, right?
Okay. Love it. Squadron mentality. So as answer to your first question, we're gonna stay together as a group. Yeah. Now, as answer to your and that's cool. And I really appreciate that, Rob, because you could be selfish in your ambition to move faster, but it's just great that you're willing to be here and learn, but also support everybody else in their learning. So I appreciate that. As to whether or not we change the day, I don't have the answer to that yet. Nobody really enjoys getting up for a class at 9 o'clock on a Saturday. I mean, it's not the most fun. I do like to enjoy my Friday evenings, whether that's at home or whether that's with a glass in my hand. So whatever, it makes Saturday mornings challenging, but it's the best time, I think, at the moment. Let's see what Dale has to say, because he's been working, he's got his new shop, and just Saturday mornings after a late Friday night are a bit challenging for him as well. Okay, so I don't have the answer to that question at the moment, but we may need to change. Has anybody got any particular viewpoints on it that you'd like me to consider?
Leon, you remember we used to do that call and it was on a Sunday evening, weren't it?
Yeah.
I mean, would Sunday evening be better for people? I mean, I don't know. Like, not late, obviously not late. I'm just like, remember we used to do that call before, didn't we, each week? And it was like...
So if I were to look at where I'm most likely to...
Because like you said, like people got commitments Saturday mornings, like work, sometimes work comes up, you can't get out of work, do you know what I mean? Sunday evening, like I'm just thinking that's generally like downtime for people. I don't know.
Well, for me, I don't know about everybody else, but Sunday evening I start looking at the charts for an hour from about 7:30 maybe, and I know that on a Sunday I'm most likely to be either, if I'm not looking at the charts at that time, I'll be with my family, or I'll be out, or I'll be at dinner somewhere. I think that we've got more chance of not being able to make the call on a Sunday evening as we prepare for work than getting out of bed to come and do the call on a Saturday morning. I mean,
I would suggest that an evening. I mean, from 8 to 9, something like that, or 9 to 10 even, when people have had the day, you've had a bit of dinner, maybe the kids have gone down or not, but an evening that most people can make.
Okay, ultimately it's going to be down to what Dell can do.
Because Saturdays don't work for Dell, and then he's never going to be on the call, which you both need to have some time teaching, both of you.
Yeah.
So Saturday mornings, it's not really going to work. I got music lessons. I always have to leave early. Other people have got different commitments. Rachel works sometimes, and the rest of it. So I just don't think Saturday mornings can work.
All right, listen, just leave it with me.
Okay.
I still think it is the best time, but it's for most of us. But it can't be the best time if Dell's not available. So just leave that be with me. Okay, cool. Anything else for today, family? Anything else for today?
Have a lovely Christmas, everybody.
So this is what we're going to do. We're going to pause. I will put the message in the group about exactly when we're going to come back. It will be the second Saturday, because I think the first Saturday is actually New Year's Day. So it will be the second Saturday in the new year that we start back.
8th.
Yeah.
Yeah, the 8th. So for now, this is what I'm going to recommend, please. If you are looking at any of the rock, I know we might be doing slightly different things here. That's cool. If you're looking at the Rock Kumar videos, just keep going with that. If you are using Bounce Back as your source of information, just keep going with that. Push through it. You've got 2 weeks. You should be able to complete Bounce Back in that time, the whole 3 phases. At least once. Maybe you won't understand everything perfectly, but you should be able to complete it in the next 2 weeks. And please, if you can, I've sent the video into the chat, and Dominique kindly put that into our WhatsApp group. Just start getting yourself familiarized with Mark Douglas's content about trading psychology. All right, so 3 things. Keep going with Rock Kumar if you're looking at Rock, or some of the other. I think we sent some videos from Siva. Maybe you can keep going with those. If you're doing a Bounce Back, aim to complete Bounce Back by the end of the Christmas period, and get into bed with Mark Douglas, for want of a better way of saying that. Just start looking at his videos and his content. Yeah. Guys, I wish you a very, very Merry Christmas. It doesn't look like we're going to meet as planned because of all of this mad COVID link-ups. But we will get a link-up early in the new year, as soon as we get through. I think probably when we get through winter period, then we'll organise a link-up, okay? Probably, maybe even at my house. We'll see. We'll see. All right, guys. Have a Merry, Merry Christmas. Thank you for everything over the last few months. And I look forward to seeing you in the new year.
Merry Christmas, everyone.
Christmas.
Happy New Year.
Happy New
Bye.
Year.
See you.
Yeah.
See you all.
Bye-bye.
Bye.